Hey, Courtney Carroll here from Fit Money IQ. Today I wanted to come on and talk to you guys about a topic that is absolutely dear to my heart. And it's this: real estate and buying your first property. Now, a lot of people have been given a set of mistruths or misguided information by well-intentioned individuals about what the market holds and what they can or can't afford. It's important that you get advice from individuals that are in the know, individuals that are going to look at the numbers and not come to you based on emotional ties, and who want to do, as I say, the best for you. And so this is why you're here. By the end of this video, what I'm about to share with you is going to give you the confidence to walk into a purchase agreement confidently and knowing that you've done the right things in the right order to qualify for your mortgage and to transition from being a renter to a buyer. So hang on and we'll get into that. So there are 5 key components that I want to speak to. But before I get into those, I want you to click subscribe, like, and share this video widely to those who you think would benefit from it. Before I move into point number 1, I just want to share the importance of who you listen to and how that has the power to elevate you to success or keep you stuck in mediocrity. No one has the right to tell you what you can and can't do and what you can and can't afford unless they're qualified to do so. I want to relate a story that I have. A few years ago, I met this wonderful lady who had shown the disciplined habit of saving, put money aside, and wanted to buy an investment property. However, she was told by a well-meaning, well-intentioned individual, a sister that dearly loved her, that she just could not afford it. And so for years, she kept on hearing that message in her mind: I can't afford it, I can't afford it. So she never took steps until she came to me. And through my conversations and rewording some things with her and helping her get out of her own mental block, she was able to buy her condo, which is now appreciated in value and has a very small mortgage left on it for her retirement and for transitioning that into her daughter's future when she passes on as a way of legacy building. So who you listen to matter. What I want by the end of this video is for you to be able to walk into a real estate purchase, if you're looking to buy your first home, with the utmost confidence that you're ready, that you've done the homework, and you're right on time to purchase your first home. So here we go. Point number 1. Don't just listen to anyone. Listen to people with information and have the knowledge base to tell you yes or no and whether or not and how much you can afford. And that means starting with a mortgage agent like myself. You want to get a pre-approval. A pre-approval basically is a piece of paper that tells you this is your ceiling, this is as much as you can afford, and this is what you can't afford. And we take a couple of factors to determine what your pre-approval is. We want to know exactly about you. Where do you work? How do you earn your income? Is it part-time? Is it full-time? Are you an employee? Are you self-employed? Are you a corporation? Do you get bonuses with your work? So we're going to start with the income. That is the driver of how much you can afford. We're going to also ask you for your credit score. And it's surprising to me how many adults don't have a clue about their credit and don't understand the importance of credit worthiness by making sure they protect it and keep it at the highest rate possible. Credit is powerful. And so we want to know your credit score because that's going to determine the premium you pay on the rates or the discounts you get on the rates. The higher the credit score, the better the rates you get. The lower the credit score, the more premium or cost it will cost you to get an interest rate. Next, we want to know about the down payment. Where's it coming from? Is it coming from money you've saved in a savings account? Is it coming from your TSFA, your RSP, right? Is it coming from the bank of mom and dad in the form of a gift? These are important pieces to know. We need to know exactly how much you have for the down payment. And we want to know whether or not you've had it in the bank for 6 months and it's easy accessible. Money that's held in cash is not a really good form of a deposit and a down payment because the bank wants to see a tracking of where that money is coming from. We take these 3 components along with your debt load. How much debt are you carrying? Or do you have a student loan? Do you have a car loan? Do you have credit card loans? Do you have a line of credit unsecured? And all these pieces we then put into our mathematical calculation to see whether or not you meet the criteria and qualify for a purchase. This is a pre-approval. We're going to pull your credit because one of the things we understand is that, it makes more sense for me to get your numbers by gathering documentation than listening to conversations. Documentation beats conversation. I've worked with many individuals that give me one story, and when we pull the document, pull the credit, it's a whole different story. So a pre-approval is your first step. It gives you black and white, what you can afford, what you can't afford, and allows you to stay focused in the areas that your money can actually work for you. Number two, this will save you a lot of stress, and it's this. Absolutely make sure that you set aside money for your closing costs. A lot of people forget this piece, and if you go to a bank or simply just call a realtor, they may not let you know this. But whatever you're purchasing, you want to leave 2 to 4% of the purchase price for your closing costs. Your closing costs will cover land transfer tax. It will cover your legal fees. It will cover title searches. When I bought my first home, I had no clue. I was not informed and no one told me. I didn't have a mortgage agent. I simply went to the bank, found out I qualified for some stuff, went out with a realtor, and went house shopping. Lo and behold, signed off with the lawyers, and I was told to bring X amount of dollars. I did not have it. But fortunately, I had a friend who had some funds that was able to loan me the money to close, and then I eventually paid him back. You don't want to be at the last hour finding out that you owe $15,000, $20,000 and you have no way to get it. So understand closing costs. That's the second piece. Always park money aside for closing, and it needs to be 2 to 4%, depending on where you are in Canada, of the purchase price. Number three, you want to take advantage of the new home buyers incentives. If you've been saving and you've developed the habit of saving, like my friend in that first example who wanted to buy a condo, and you've put money aside, not just in a savings account, but you've invested it wisely. It's in an RSP and it's been growing. It's been in a TSFA and it's been growing. You can take that money as your down payment. $60,000 per purchaser from your RSP, and you don't have to pay that back for 18 years. 3 years is a grace period where you don't have to start paying. You start paying in year 4 and you've got 15 years to pay it back. When you take that money from your RSP, it's tax-free as long as you pay back into that account over the time frame that I've mentioned to you. So if you're a couple living together or married, you can access up to $120,000. Again, for some people that's not possible, but for those who understand the law of compounding, who've been saving early, that may be one way of getting the down payment to do what you need to do. Access to your TSFA, that money grows, right? Tax-free, you've already paid with after-tax dollars, and therefore whatever comes out of that is, again, tax-free to you. The government introduced the first home savers account, first-time home buyer savings account. You can put up to $8,000 a year, maximum of $40,000 over the lifetime of the loan, and that now, whatever grows in that, can also go towards your down payment. So take advantage of those things. You also have the land transfer tax rebate that you can get back, different amounts for different places and different provinces in the country. Number 4 is this. In Monopoly, one of the best things about Monopoly is it teaches you that location matters. Understand and prioritize where it is you want to purchase your house, and make sure the realtor knows. What do you need to have as a must? Is it about having, your home closest to a school? Is that very important for you? Is it about having green space in your backyard? Is it about having a condo because you don't want to shovel snow and you're okay with paying a condo fee? Is it about being in a freehold townhouse where you don't have fees and maybe you want a double car garage because you're looking at a space for growing family? Decide what it is you want and prioritize those things with your realtor, because it's going to be important. Location matters. Do you need to have a church around you? Does it need to be close to the highways? All these things matter in your purchase decision, and you want to have that conversation with your realtor ahead of time so they only go to the areas that meet the criteria for what it is you're looking for. And finally, it's this. Be ready to close. When you see that opportunity, make the offer. Do not stress over the offer. You make the offer at a price that is reasonable. Your realtor will help you adjust what that offer price is. And if it's accepted, now you need to go and get the documents to someone like myself, because now it's the verification stage. Remember, the pre-approval is not a mortgage. It's not a commitment. It's only telling you that you can afford this amount. When you make the offer and the offer is accepted, now it's time to go and get the documents verified, your income verified, pay stubs, job letters, and all those things. When you make an offer, promise me this: do not, under any circumstances, waive your financing clause or your inspection clause. You want to keep the financing clause on this. It allows you 10 days to make a decision and say, you know what, I may have some cold feet, I want to change, I don't want this house anymore. Or at that time, maybe something has changed between the time you got the pre-approval and the time you're buying this property. Maybe you've lost a job, maybe you've changed a job, maybe you bought something on credit that's impacted your credit score. All those things may impact whether or not you get the loan and a commitment when you make that offer. So do not waive your financing clause. Do not waive your inspection. I know when it's a hot market, we're worried about being outbidded, but there's always good properties. If you miss one, don't over purchase as far as price points just because you're worried about losing out. And the last piece is that inspection clause. That is so powerful. $400 to $500 to pay for a quality inspector, a professional inspector who will go and make sure that your house is sound, the foundation is found, there's no cracks, there's no water leaks, there's no mold, right? There's no attic leak where water's coming through, the shingles and the roofing is good. Your eyeball is not a test for whether or not the property is sound. So be willing to commit that $400 or $500 to get it inspected professionally. Your husband, your wife, your brother-in-law, they are not home inspectors. You want to manage this portion especially seriously. So make sure you get those pieces together. Those 5 components, I guarantee you, if you understand this and you follow these 5 pieces, get the pre-approval, understand why it's important, get your credit up to speed, okay? Make sure you understand closing costs. Make sure that you are working with a realtor and prioritize the locations based on your needs. Make sure you take advantage of the incentives for new home buyers, and make sure you are closing. Make the offer. Don't waive your financing. Don't waive your inspection. If you do this, you will walk into any purchase decision with the confidence that you're ready to move up from a renter to a buyer. Owning a home is the foundation for wealth. It's been used throughout time. If you can get into the market, then get into the market. So if you've been sitting on the sidelines because you just didn't know what to do and no one's been giving you the advice here is sound. Leave a message. What are your greatest concerns when it comes to buying a property? How can I be of assistance to you? If you leave a question in the chat box, I will follow up with you. Again, I'm asking you to like, subscribe, and share this video if you find the content of value to you and can be beneficial to others. Follow me for more information on Instagram, as well as tune in on a regular basis for more information around your financial health and building that fit financial legacy for your future. Courtney C., Fit Money IQ.